So we've been talking a lot about bank accounts and checking accounts the last couple of days in class. And the next section of the chapter talks about reconciling your bank statement or a bank reconciliation. So let's talk about that for a few minutes and what that is. This is an example of a bank statement. And if you have a checking account, whether it's personal or a business account, the bank is going to keep track of all the money that comes into the account and all the money that goes out of the account. Typically, the bank statement will be for a month at a time. It will usually be then list all of the checks and all of the activity on the account in chronological order by date. And so if you look at this one, the statement date is January 30th. It has the name of the company. It tells you how many checks were written on it, what the amount of those checks were, how many deposits you had, the amount of the deposits, your service charge, which is what the bank charges you for having the account, and your statement balance. And then it just goes and it gives you a daily balance or a balance after every transaction. These are the dates. These are the check numbers and the amounts that go with them. And there are two different columns here just because you do these and then it comes over to these columns. Not all bank statements will look like this one, but this is the one that the book uses. And then this column is for deposits. And so each line goes across. And on some of these lines, you have two checks that come out and a deposit that goes in. And so it figures that new balance. And so that's what the bank statement is. And so a check that the bank has paid, or what in the real world they call the bank, it has cleared the bank, is what they call a canceled check. Doesn't mean the check is canceled and the money's not coming out of your account. It means that it's cleared through the bank and the money has come out of your account. So why would you reconcile a bank statement? Because in today's world, let's be honest, a lot of people don't. But your personal account is a little bit different than your business account, because even though it is important to reconcile your bank statement with a personal account so that you don't overdraw your account, or not have enough money in there to pay a bill that's going to automatically come out or something like that, it's even more so important with a business account, because business accounts you have to turn in tax records and all that kind of stuff. And so here's 4 reasons why your records wouldn't match the bank's records. And these are the reasons why we have to reconcile our bank statement to check these things out. The first one might be that the bank charged you a service charge and you have not taken it out of your account. And so back here on this statement, it shows right here that there was a service charge of $25. That's the bank's charge for you having that account. If you haven't taken that out of your records, then that's $25 you do not have in your bank account that you think you do. The second one is outstanding deposits may be recorded in your records, but not on the bank statement. So what an outstanding deposit is a deposit that you've put into the bank but is not showing yet on the bank statement. It could be that that bank statement cuts on January 30th and you make that deposit on February 1st. So the deposit is in the bank and you know it is, it's just not showing on the bank statement. And in today's world of electronic banking, again, on the personal side, you would just probably go into your electronic banking and see that it's in there. But in the business world, you don't always have that access to that electronic banking like you do in a personal one. So an outstanding check is similar to an outstanding deposit. It's a check that you've written but has not cleared the bank yet. So it could be you write a check to pay a bill to ABC Company, and ABC Company puts it in their safe with their stuff from their cash register for the night, and maybe they only go to the bank every 2 or 3 days. So that check sits there for a few days. You know you've written it. It hasn't come out of your account yet. So that money is accounted for, and so you want to make sure that you don't spend it again thinking it's in there. And then the fourth one may have been a math issue. And In today's world with banks, because everything's electronic, it's probably highly unlikely that there's going to be a math error. But let me tell you a little personal story. About a year and a half ago, I was going out of town for a weekend, and I drove through the bank to get some money, and the ATM told me that my account was overdrawn, and I knew that I had money in there. So I had a little freak out, and it just so happened that I was in the bank parking lot. So I pulled up my online banking and I looked, and there was a $2,500 check that had come out of my account. That was not a check that I'd written. And in online banking world, you can go on and you can look at the check itself, because they usually have an image on there. And it was a check written to some business, and they'd taken it out of my account. So I pulled around, went in the bank, and the business account that it was supposed to have been drawn on was one digit different from my personal bank account. And they took it out of my account. Had I not caught that, I could have had many overdraft charges and thought I had money in there that wasn't in there. And so they fixed it for me right away. And it literally was a 20-minute issue. I got in there, they fixed it, and we went on our merry way. But had I not checked that out, that could have been a big issue for me. So mistakes do get made on the bank side and on the business side. So why should you reconcile your bank statement? A couple more reasons. You want to catch any fraud before it's too late. It helps you identify internal administrative issues that need attention. So you may need to change the way you do some of your recording and stuff, and reconciling your bank statement will help you do that. So reconciling a checking account compares the bank records to the account holder's records. That's called reconciling. So the steps for doing that: this is a form that you would use to reconcile a bank statement. You can get these, you can print them off of bank websites if you want to, or you could create a spreadsheet for it, which you're going to use later on in this lesson. So you start by putting the date that you're doing the reconciliation. Then you start with the check stub balance. This is your records. So this is the business's check stub with the balance that they are showing they should have in their account. That's what goes here. And then check stub number, this is check stub number 4. We talked about check stubs in the last lesson. Then that service charge, and if you remember back on the statement, it had that $25 service charge up there. So this is what we show we have in our bank account. Then we have to take this service charge out. We weren't showing that to start out with. So we bring that over. Sometimes you have multiple charges. We just have one here. Then we're going to subtract this $25 from our balance, and that gives us our new adjusted check stub balance. Then you go to the other side where you start with what the bank statement says you have. Then you have any outstanding deposits that you know you put in there. A deposit makes your bank account go up. So you might have multiples. This just has one. If you had multiples, you would add them together, and that would go here. Then you add, because deposits make your account go up, you add this amount to that bank statement to get your new balance or subtotal here. Then any outstanding checks that you have, checks that you've written that haven't cleared the bank yet, you list them here, you add them together, and that amount goes here. Checks decrease your bank balance. So then you take your new subtotal minus your outstanding checks, and that gives you your adjusted bank balance. And these two need to balance. And if they don't, then you have lots of different things you can do to figure that out. You go back through, make sure you have all your checks written down, that you have them all recorded. Double check through the bank account to make sure that they haven't made a mistake. But that's the goal, is to make these two things balance. If they don't, you should not move on until you've found that error. After they do balance, then you're going to come back to your check stub, which is your records, and you're going to record that service charge on that check stub. Because doing it over here tells us we need to do it, but we have to get it put on the check stub so that our check stub balance here now matches what we said it should right here. So you just write service charge on there, write the amount of the service charge, calculate and record the new balance on the subtotal line. Now your check stub's ready to write the next check. Now, we recorded that $25 on our check stub to show that it's got to come out of our account. But we also have to do a journal entry for it because our cash account in our ledger still does not show that $25 out of there just because we recorded it on the check stub. So we have to do a journal entry to make our cash account correct. And that journal entry is miscellaneous expense. Some businesses might have it labeled as bank fee expense, but for now, we're just going to call it miscellaneous expense. That expenses go up with a debit. Cash is going down with a credit because we're decreasing our cash. So that journal entry, received bank statement showing January bank service charge of $25, debit miscellaneous expense, credit cash. And that's how you reconcile a bank statement.